It's a real challenge, David, for across our government to stay up with the remarkable innovations. The last time we updated our rules for the stock markets, the equity markets, was in a significant way was in 2005. And 16 years later, those rules that may have been fit for purpose then, are they really ready for the 2020s?
The gentleman from Baltimore, one Gary Gensler, SEC chairman, and someone of uncommon academic acuity, someone even the Republicans have said, boy, does this seem to be the right guy at the right time. Interviewed by the gentleman from Baltimore, David Rubenstein, peer-to-peer interview. And the gentleman from Baltimore joins us now. Did you guys know each other? Did you know the families years ago?
We grew up in the same part of Northwest Baltimore, but he's younger than me, and so I really didn't know him.
It's interesting to see the path of Gary Gensler now to this point, David, of an SEC facing absolutely stunning innovation. It is just mind-boggling to me, the challenges ahead. What did you learn about Gensler's approach to these innovative challenges?
Gary Gensler, for those who don't know him, is a really, really smart person, an academic superstar at Penn, but also a professor at MIT, and also a very young partner at Goldman Sachs. Previously headed the CFTC, now the SEC. The real challenge he has is, does he need to go to Congress to get additional authority to regulate things like cryptocurrencies, or can he do it with the existing authority? And I suspect he will use existing authorities, because trying to get legislative approval for some of the things he wants is going to take forever, and the markets may move well past what Congress already decides to do. So I think he's going to do things administratively and see what the impact is.
David, Tom was framing innovation as a positive. Does Gary Gensler view it as largely a positive that you do have so much money going into crypto assets?
Well, I think he thinks that innovation is good, but you have to make certain that the SEC's job is to make it clear to everybody what the facts are. They're not saying this is a good investment or this is a bad investment. They're saying here's all the facts you should have before you make a decision. But sometimes now people are not being quite accurate in his view about what the facts are, or technology is pushing people to make certain investment decisions they might not otherwise make if they really knew all the facts. So that's what his concern is.
How do you police this at a time when the technology is moving more quickly than often regulators can keep up? And frankly, when the brightest minds are attracted to the biggest paychecks, seen more in Silicon Valley or Wall Street than in Washington, D.C.?
That's a real good question. There's no great answer for it, because the truth is you can make staggering sums on the outside, outwitting the regulators, and the regulators are playing catch up. So I think all you can really do is make a couple examples of people who've made some mistakes and hope that will trickle down to other people. But it's impossible to catch all of the innovations that are going on that probably the SEC isn't happy with.
David, an overarching question, and I say this with immense affection for, say, Ace Greenberg at Bear Stearns, with the buy tickets in one pocket and the sell tickets in the other pocket. We're now to Robinhood in all. Have we gone too far? Have we gone too far in a search for depth of market and very narrow spreads that maybe benefit some but harm others?
Too early to say. There's no doubt that younger people are coming into the market and trading, day traders, hour traders, minute traders, and I don't know that they're fully informed about what they're doing. But also, there haven't been gigantic losses for many people yet, because the markets have been very robust.
Yes.
Now, if all of a sudden the markets go down, we'll see, as Warren Buffett likes to say, who's swimming without a bathing suit on.
Well, tell me again about what Gensler's approach is just in the next 12 months, the to-do list, the immediacy for his slow motion agency.
He's asking his staff to come up with ideas. In other words, the way he operates at the CFTC and at the SEC is he has a lot of smart staff people. He asks them to deal with the challenges he asks them to deal with and come back with recommendations. So he's waiting for recommendations. But I suspect at some point he will deal with some of the challenges like cryptocurrency. Most recently, after my interview with him, he made a speech about private equity, indicating that he thought there were some issues that had to be dealt with disclosure about private equity fees and so forth. And we'll see whether he regulates in that area. There's no doubt that he has a lot of authority. There's no doubt he's very smart and determined to do something, as he did at the CFTC. So I suspect his tenure at the SEC will be one of activism. And there's no doubt that he's highly respected in the White House and highly respected in Congress.
I have to say, David, Tom was talking about younger traders going into crypto assets, and I got a text from my 12-year-old son this morning saying, Mom, we should buy some Ethereum. It's going up fast and will continue. I do wonder, David Rubenstein, in your tenure in the markets, in your decades, do you think that investing has gotten more or less treacherous for investors?
Well, the example you just gave is an example that reminds one of Joe Kennedy when he was getting his shoes shined. And the person shining his shoes was talking about stock tips. That's when he realized too many people were in the market and he sold everything. When your 12-year-old is dealing with stock market gyrations, you have to wonder whether that's the top of the market. But there's no doubt that the market is much more complicated today than it ever was, and technology is giving people certain advantages over other people when they trade. And what the SEC is trying to do is to make certain that everybody has an equal playing field. It's not easy to do because the technology is changing hour by hour. So I think people have to really know what they're doing when they trade in the markets and recognize that it's a great time to make money recently, but at some point, markets do go down, and then there are going to be some losses. And I suspect at that point, you'll see investigations.